Hello folks, this is Les Goldstein, President of Personal Financial Strategies Incorporated, with an educational economic update for the month of September 2016. In this month's video, we'll discuss some of the major headlines that influence markets in August and give you some insight as to what they might mean for you as an investor. As always, please stay tuned at the end for a required disclosure statement. Markets rallied for much of August on better than expected earnings reports and some strong economic data. However, official statements showing that the Federal Reserve is moving closer to raising interest rates again gave some investors pause to slow down and have some concerns. With the bulk of corporate earnings seasons behind us, we have a pretty good picture of how U.S. companies performed in the second quarter of 2016. Looking at results from 483 of the 500 S&P 500 members, we see that overall earnings are down 3.2% on revenues that were up by just 0.1%. While lower profits aren't good, corporate managers did a fine job managing shareholder and investor expectations. Over 72% of these companies beat their earnings estimates, and just over half beat their expected revenues. The stock market treated most of this news as a win, since traders had been surprised by the results. The Federal Reserve was also the source of a lot of market activity last month. Minutes from the July meeting of the Open Market Committee showed that Fed economists are split in their opinions about the economy and their position on raising interest rates over the near term. Fed hawks, those who want to raise rates soon, believe the economy is strong enough to justify an increase of interest rates right away. Fed doves, economists who favor more conservative policy right now and a more cautious approach, aren't convinced that a rate hike needs to happen quickly. They think that low inflation and global concerns mean that the Fed should continue with its wait-and-see attitude. We, and most Wall Street analysts, don't believe that the Fed will raise rates in September. However, there's a reasonable chance that an interest rate hike might take place before the end of the year in December. If the labor market continues to improve and economic growth looks solid, we could see higher rates before the beginning of 2017. Speaking of economic growth, we got our second look at gross domestic product growth at the end of August. The first estimate showed growth of 1.2%, but that was edged down to 1.1% in this second report. Why? Broadly, while consumer spending did ramp up last quarter, business spending pulled back, leaving economic growth stuck in neutral. What this means is consumer spending, which is the second largest factor in the U.S. economic growth, kept the economy growing. Businesses took a look at their shrinking profits and closed up their wallets relative to investing in corporate build-out structure and infrastructure. So, what can investors expect over the next coming weeks? It's likely we will continue to see volatility in the stock and bond markets, and perhaps even a pullback as investors digest data ahead of our upcoming November election. The Federal Reserve Board votes on interest rates this month, and that will also fuel the uncertainty and speculation. As always, we'll keep you informed. Feel free to call our office at 847-268-3670 with any specific questions. And that's it for this month's Educational Economic Update. I'd like to share with you at this time a couple of upcoming events in our world. Number one, we are now teaching our classes, our Big Picture Retirement Planning Workshop at Oakton College and at Harper College. Please visit our website at www.personalfinancialstrategies.net for the exact times, dates, and locations. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 847-268-3670. We are always happy to help. Now, while we believe the information that we shared in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or the solicitation for the purchase or sale of any investment security. Please consult with us before making any investment decision. That's Les Goldstein signing off for the month of September 2016. Have a great fall. Go Cubs!